Is this AI generated video of my new kitten trading stocks the most profitable use of AI so far? Or is it the digital ad that you see every time that you play your favorite mobile game? Like when you run out of turns on Candy Crush, for certain you're going to see an ad.
Unfortunately, it's 2025, and the best use of AI, the most profitable use of AI, is still digital advertising. And today we're going to talk specifically about everybody's favorite mobile advertising company, AppLovin.
In 2025, AppLovin has faced a short seller report and now an alleged US SEC probe into their data collection and privacy practices. Despite this, our stance remains the same. Let the business prove it itself.
Yeah, and so far it has, at least in terms of financials. If you own AppLovin or this is one you're interested in buying the dip on, these are items that you should most definitely watch and make sure the company is not going to actually run afoul of regulators. That is one of the unfortunate, really unfortunate downsides of the digital advertising market. Data privacy and data practices are a real concern, not just among AppLovin either. Obviously, all the big tech giants do some fishy things. At any rate, let's dig into this because this is a massive industry. Upwards of $800 billion in 2025 will be spent on digital advertising, and it's still very much a secular growth theme, and it's a technology-driven growth theme. As we said, AI, doing more with less, basically, is the best use of AI thus far from an investing point of view. And so as all these companies continue to grow at a high single digit or low double digit increase, including the big players in the market, Google, Meta, Amazon, and so on, they're able to convert more incremental revenue into profit thanks to AI automation. And AppLovin partnered with Google and running its Axon platform on NVIDIA L4 GPUs is one of those companies most certainly getting done more with less. And even without TikTok, which obviously they did not acquire, that is going the way of Oracle and a consortium of other private equity investors instead.
Even though they're not getting TikTok, AppLovin is doing just fine. Let's look at the Q3 earnings numbers and revenue growth rate. Revenue for the quarter came in at 1.4 billion and the growth rate up 68% year over year.
Totally wild. And it gets crazier here in just a moment. We'll show you some more. But first, we wanted to plug our new chipstock investor web app. We are hard at work building this thing out right now, and you can get access to it as we build and fill out the company supply chains that we follow. Here's a look at some of the relationships AppLovin has, both upstream companies that it relies on and its downstream customers, and a look at what will be driving their future growth. Of course, you can also read all of our research on the Chipstock Investor web app, and you still get access to our community of fellow investors that think long-term, they're inquisitive into how actual businesses work and operate, and we're constantly digging up new opportunities. Join us over there. Link in the description below, chipstockinvestor.com. Now, Casey, speaking of new product launches, for those of you that have been following AppLovin for a while, probably know that AppLovin is also getting into a new vertical for its digital advertising platform.
After their launch of the Axon and the success that they found with that with mobile app publishers, they're making a push into e-commerce websites. AppLovin curated some of their e-com shops last year, but they started making a wider rollout in October 2025 with a new self-serve digital ads management platform.
We poked around a little bit ourselves on this new self-serve side of AppLovin, and it appears to be pretty slick. Looks like it's pretty easy to use, at least if you have experience running ad campaigns. And one standout here is there is no minimum. There's no budgetary minimum that you can throw at this thing. And so for a lot of e-commerce shops, perhaps they are small, they're still scaling, going out and striking a big advertising partnership with an established agency probably isn't going to happen. So having another tool available like this to be able to access not just mobile apps now, but also the open web. There's partnerships there with Google's DV360 as well as Shopify. This probably makes a lot of sense with this low barrier to entry platform.
CEO Adam Foroughi has stated the 20% or more average revenue growth rate has definitely been met with some skepticism, but this expansion into e-com and self-serve parts of the digital ads market have been promising so far. But let's dig deeper into the Q3 numbers and the outlook for Q4.
We told you the numbers got crazier as we come down further down the income statement and the cash flow statement. Nearly 100% of cash from operating activities was converted into free cash flow in Q3. So 1.05 billion in free cash flow. Yeah, that's right. You saw that right. If you did the math in your head, a 75% free cash flow margin. Talk about doing more with less with AI. Now, just over half of that was used for share repurchases, 571 million. So company not reducing its share count like it did in years past, but still offsetting stock-based compensation to its employees, typical software, high growth software company stuff. But you can see the resulting free cash flow per share with a big near year-over-year doubling as a result. Pretty incredible stuff.
The Q4 guidance is quite good. We'll exclude and back out that apps segment that from Q4 fiscal year 2024, which they divested earlier this year. Even with that gone, at the midpoint, the revenue guidance will be an increase of 59% year over year. Adjusted EBITDA is also expected to increase 68% year over year at the midpoint, also when excluding that apps revenue segment. And then, of course, let's take a look at their balance sheet.
Yeah, this is another area where we said you should watch closely. AppLovin got quite aggressive, especially during the bear market, repurchasing its stock like crazy. They have eased up on that a bit. And thanks to that big free cash flow jump in Q3 and in the last couple of quarters, you do see the cash on balance starting to rise. Casey, you had mentioned the sale of the apps segment as well. That also helped replenish a bit of cash on the balance sheet too. At any rate, there is still more debt than cash on balance, but we do see this situation improving very rapidly for AppLovin. And based on their past activity, they have been quite acquisitive. Let's see if they do more of that, or if they're going to do what they've been doing as of late in striking more partnerships with other companies within the mobile gaming, mobile publisher, and e-com parts of the market.
Since app has been such a hot stock in recent months, we decided we'd do an update on our reverse DCF. Now, of course, it's not the value it was a few months ago, but let's go ahead and take a look and see what's baked into the current valuation. Trailing 12-month free cash flow per share of $9.77 compared to $9.14 last quarter. Free cash flow per share growth of 30% for 5 years, a terminal growth rate of 6% with a discount rate of 10%, gets us to a fair value of around $680, which was the pre-market share price when we recorded this video on November 6th, 2025. It's not the same value it was before, but it's not outrageously priced either, especially when you compare it to some other AI software companies like...
Don't even mention it. Don't even say it.
The company that we won't speak of. And so depending on your style and more importantly, your portfolio need, app could still take a position in your portfolio. It certainly looks like it still has some gas in the tank. However, that being said, it is going to be a ride.
It's going to be a very wild ride. And just mention one last time, if you missed it earlier because you were skipping around in the video, check us out, chipstockinvestor.com. Get access to our new web app and learn about all of the companies we follow, all of our research, and access to our community before the market starts talking about it. Seriously, sign up. Our members have been generating massive ROI off of it the last few years, and we are dedicated to creating lots of value. We'll see you over there.
See you all very soon with another episode. Take care, everybody.